Hello students. In present video, I am going to explain about 12th problem from retirement of a partner topic. I am taking this question from Inter Second Year Telugu Academy Accountancy Textbook. But this video is useful to all commerce students who want to know about retirement of a partner topic. Previous videos links are available in the description box. Let us see the question first. Harish, Satish and Mahesh are partners sharing profits and losses equally. Three partners are there. So equally means 1:1:1 is the old ratio. Their balance sheet as on 31st March 2020 was as under. This is old balance sheet. On the above date, Mahesh retired from the business on the following terms. A. Land is valued at 38,000 rupees. B. Depreciate machinery by 5,000 and stock by 2,000. C. Goodwill of the firm valued at 24,000 rupees and decided to give the Mahesh share of goodwill without raising goodwill in the books. D. Harish and Satish share future profits in the ratio of 2:3 respectively. What is asking? Give necessary journal entries and ledger accounts and balance sheet. He is asking journal entries. But in public examination, no need to write the journal entries. So directly ledger accounts and balance sheet we prepare. In ledger, first account is revaluation account. It is a nominal account. Nominal account rule, debit all expenses and losses, credit all incomes and gains. When loss comes, in revaluation of assets and liabilities, if asset value decreases or liability value increases, it is a loss. Show them on debit side of this account. When gain comes, profit, in revaluation of assets and liabilities, if asset value increases or liability value decreases, it is a profit. Credit side we have to show. Adjustment number A and B, these two are related to revaluation account. B. Depreciate machinery by 5,000 and stock by 2,000. Machinery we should depreciate by 5,000. In old balance sheet, machinery value is given as 40,000 rupees. In old balance sheet, machinery value is given as 40,000 rupees. Cost price is 40,000. And in adjustments, he is giving that machinery value is decreased by 5,000. Means in revaluation of machinery, partners came to know that its market value is decreased by 5,000. So how much is the market price? 40,000 minus 5,000, 35,000 is the market price. So machinery is an asset. Asset value is decreased by 5,000 rupees. That 5,000 is loss. That 5,000 debit side we have to show. In previous problems, he used to give percentage. Depreciate machinery by 10%. Like that he used to give. But here direct depreciation amount is given. So we need not to calculate the depreciation. Directly write down that 5,000 rupees in outer column. To machinery. Debit, depreciate machinery by 5,000 and stock by 2,000. Stock by 2,000. In old balance sheet, stock value is 52,000 rupees. Stock also same. In old balance sheet, cost price is 52,000 rupees. In adjustments, he is giving that 2,000 market price is reduced. Means market price is 50,000 rupees. Stock is reduced by 2,000. 2,000 is loss. That loss debit side we should show. 2,000 rupees to stock account. See the adjustment number A. Land is valued at 38,000 rupees. In old balance sheet, land value is given as 25,000 rupees. In old balance sheet, land value is given as 25,000 rupees. And in adjustments, he is giving that land value is 38,000 rupees. So 38,000 is a market price, 25,000 is cost price. Market price is increased by 13,000. That is profit because land is asset, asset value increased. Credit side we should write. By land account. How that 13,000 comes? Market value 38,000 rupees minus cost price 25,000 rupees. Difference 13,000 in outer column. So all amounts are completed. Finally, find out the profit or loss in revaluation of assets. Credit total is more than debit total. Credit total 13,000 rupees minus debit total 7,000 rupees. Difference is 6,000 rupees. This is profit because credit side we wrote gains, debit side we wrote losses. Profit is more than loss, so final amount is profit. This profit, who should take? All the three partners. So to their capital accounts, we have to transfer this amount in old ratio. Which side? Debit side total is less, so debit side we have to show the transfer. To Harish capital account, profit amount 6,000 rupees. In old ratio, in question is giving that three partners are sharing profits and losses equally. 1:1:1, 1/3 each. So 6,000 into 1/3. 2,000 rupees. For other two partners also same. To Satish capital account, same calculation, 2,000 rupees. To Mahesh capital account, 2,000 rupees. Two sides put the totals, 13,000, 13,000. Revaluation account is completed. Next, capital accounts of all the three partners. Capital accounts of Harish, Satish and Mahesh. Debit side, credit side. What are the hints? At the time of retirement, the amounts which a firm should pay to partner, credit side we should show. The amounts which a partner should pay to firm, debit side we should show. First we have to start with the opening balance. From where we should take these amounts? In old balance sheet, liability side capital amounts are there now. Harish 50,000, Satish 50,000, Mahesh 50,000. These three amounts you have to show here. Opening balances on credit side we have to show. What to write in particulars column? By balance brought down, 50,000 rupees each. Why on credit side we are writing? Capital is a liability. Liability shows a credit balance. Therefore credit side. Otherwise see this hint. Partners brought these amounts into the business. When they retire, firm should return these amounts to partners. No? Firm should pay to partner at the time of retirement. Therefore credit side we are showing. Next what to write? In revaluation account we got profit. No? That amount we should write. In revaluation account debit side we got profits. No? What is the entry for this? In revaluation account debit side we posted. To post like that, in journal entry, revaluation account should be debited with 6,000 rupees. Partners capital accounts we have to credit. To Harish capital account 2,000 rupees. To Satish capital account 2,000 rupees. To Mahesh capital account 2,000 rupees. This entry we have to post in capital accounts. Which side? In entry capitals are credited. So credit side we have to post. What to write in particulars column? By revaluation account. In Harish column 2,000, in Satish column 2,000, in Mahesh column 2,000 rupees. So credit side by revaluation account 2,000 rupees each. Next come to accumulated profit. General reserve. Liability side, general reserve 30,000 rupees. General reserve amount we have to show on credit side of capital accounts because this is partners amount. If they retire, firm should pay to them. By general reserve 30,000 rupees in old ratio 1:1:1, 1/3 each, 10,000 rupees each. Next come to goodwill adjustment. CBT is related to goodwill adjustment. Goodwill of the firm valued at 24,000 rupees and decided to give the Mahesh share of goodwill without raising goodwill in the books. In case of retirement, to adjust goodwill, there are three methods now. Revaluation method, memorandum revaluation method, direct adjustment. If goodwill is created and written off, we should apply memorandum revaluation method. If a retiring partner's share of goodwill is to be adjusted without opening goodwill account, we should apply direct adjustment method. If these two sentences are not there, then we should apply revaluation method. In question clearly is giving total goodwill is 24,000. In that retiring partner's share of goodwill we should adjust without opening goodwill account. Means direct adjustment method we should apply here. Three partners started business now. Harish, Satish and Mahesh. When there is any profit, that profit will be taken by these three partners. Now Mahesh is retiring. So after his retirement, whatever may be the profit, that profit will be taken by Harish and Satish only. So Mahesh's share of profit after his retirement, Harish and Satish are going to take. Means Mahesh is a sacrificing partner, Harish and Satish are gaining partners. So to sacrificing partners, gaining partners have to pay compensation. So that compensation is known as goodwill. So in case of retirement, existing partner should pay goodwill to retiring partner. In which ratio? Why they are paying goodwill? Because they are gaining Mahesh share. So in which ratio they gain, in that ratio only they have to pay. Means goodwill they have to pay to retiring partner in gaining ratio. In question, gaining ratio is not given. Old ratio and new ratio is given. In question, new ratio is given. Debit. Harish and Satish share future profits in the ratio of 2:3 respectively. Therefore, gaining ratio we have to calculate. Let us calculate gaining ratio. Calculation of gaining ratio. Old profit and loss ratio of Harish, Satish and Mahesh is equal to 1:1:1. In question he has given no? 3 members are sharing profits and losses equally. Therefore 1:1:1. 1/3, 1/3, 1/3. New profit and loss ratio of Harish and Satish is given in the question no? 2:3. So Harish's share 2/5, Satish's share 3/5. How 5 came? 2 plus 3, 5. To calculate gaining ratio, there is a formula. New profit and loss ratio minus old profit and loss ratio. Harish gained how much? Harish new ratio is 2/5 minus Harish old share is 1/3. 5 and 3. Find out the LCM. With no table, we can divide these two numbers. So LCM is 5 into 3 is equal to 15. 5 how many is 15? 5 3s are 15. 3 into 2 6 minus 3 how many is 15? 3 5s are 15. 5 into 1 5 is equal to 1/15. For Satish also do the same. Satish gained. Satish new share is 3/5 minus Satish old share 1/3. For 5 and 3, LCM is 15 now. 5 3s are 15. 3 into 3 9 minus 3 5s are 15. 5 into 1 5. 9 minus 5 4. 4/15. So Harish gained 1/15. Satish gained 4/15. So take only numerators. Here in 1/15 numerator is 1 is to, in 4/15 numerator is 4. So gaining ratio of Harish and Satish is equal 1:4. And don't do cross checking here. For new profit and loss ratio we do cross checking now. That is 1 plus 4 should be denominator. But here 1 plus 4 is equal not denominator, not 15. So for gaining ratio and for sacrificing ratio in case of admission, we should not do any cross checking. So Harish gained 1/5 share. Satish gained 4/5 share. So gaining ratio is 1:4. In this ratio, existing partners have to pay his share of goodwill to him. Total goodwill is 24,000 rupees. In that, Mahesh's share of goodwill is, their old ratio is 1:1:1. Means Mahesh share is 1/3. 24,000 into 1/3 is equal 8,000 rupees. So existing partner should pay 8,000 rupees to Mahesh towards goodwill. In which ratio? In gaining ratio. How they pay? So from their capitals, we have to decrease these amounts, and to retiring partners' capital, we have to increase that amount. So capital is a liability. Liability shows a credit balance. If you want to increase the liability, again you have to credit. If you want to decrease the liability, you have to write on opposite side. Means we have to debit. So whose capital we want to increase? We want to give 8,000 rupees to Mahesh, no? Means Mahesh capital we have to increase. Therefore, in goodwill entry, Mahesh capital account we should credit. With how much amount we have to credit? His share of goodwill. Total goodwill is 24,000. In that, his share is 24,000 into 1 by 3. 8,000 rupees. Who should pay this amount? Harish and Satish. So their capitals we have to decrease. Means their capitals we have to debit. So Harish capital account data, Satish capital account data to Mahesh capital account. Amounts. How much amount Harish should pay to Mahesh? In 8,000. Harish gained 1 by 5th share, no? 1:4 for Harish and Satish. Harish number 1, Satish number 4. So Harish share is 1 by, add these two numbers, 1 plus 4, 5. So 1/5 of 8,000. Harish should pay to Mahesh. 1,600 rupees. Next, Satish capital. 8,000 into 4 by 5. 1,600 into 4. 6,400. So this is goodwill entry. In gaining ratio 1:4, we debited existing partners' capital accounts. If you observe this entry, there is no goodwill word. That only as given in the question. Without opening goodwill account, retiring partners' share of goodwill we have to adjust through existing partners' capital accounts. So this is called direct adjustment method, because directly through capital accounts only we are adjusting the goodwill. As goodwill account is not open, we need not to open goodwill account also. So this entry we have to post in capital accounts. See, Harish capital, Satish capital. These two capitals are debited. Therefore, debit side once we have to post. What to write in particulars column? Other side, credit account name to Mahesh capital. In Harish column, 1,600 rupees. In Satish column, 6,400 rupees. Similarly, we credited Mahesh capital. So credit side also we should post this entry. What to write in particulars column? Other side, debit accounts names. We debited two accounts, no? Harish capital, Satish capital. Both you have to write here. By Harish capital account, by Satish capital account. In whose column? In Mahesh capital account we are posting now. So these two amounts in Mahesh column. So everything is completed. Finally, find out the balance carried out. First, credit side totals. 62,000, 62,000, 70,000. Who is retiring? Mahesh. So to Mahesh, existing partners have to pay finally 70,000 rupees. How this amount is paid to him? How retiring partners due amount is paid? There is no information in the question. As there is no information in the question regarding the due amount of retiring partner, our assumption is his amount we are transferring to his loan account. So debit side, we have to write to Mahesh loan account. Amount 70,000 rupees. Total also same. Come to existing partners capital accounts. Credit total minus debit total becomes balance carried out. 62,000 rupees minus 1,600. 60,400 for first partner. To balance carried out. Total 62,000 rupees. For second partner, 62,000 rupees minus 6,400. 55,600 rupees. Total 62,000 rupees. In Mahesh capital account, debit side we wrote Mahesh loan account. For this, what is the journal entry? Mahesh capital account we should debit, because debit side we posted amount 70,000 rupees. 2. In particulars column we wrote Mahesh loan account, no? So write down that 70,000 rupees. So this is the entry for transferring retiring partner's due amount to his loan account. With this, capital accounts are completed. Next come to Mahesh loan account. Mahesh loan account. See this entry? Mahesh capital account add to Mahesh loan account. As Mahesh loan account is created, this entry on credit side we should post. What to write in particulars column? Debit account name, Mahesh capital account. By Mahesh capital account, 70,000 rupees. Total save. Debit side to balance carried down, 70,000 rupees. This amount in new balance sheet under liability side we have to show. So ledger is completed. In ledger we prepared revaluation account, capital accounts, Mahesh loan account. Finally, we have to prepare new balance sheet. Balance sheet of Harish and Satish as on 31st March 2020. Mahesh is retired now. Now existing partners are Harish and Satish. Only their names you have to mention here. Liabilities amount, assets amount. Based on the old balance sheet and adjustments, we have to prepare new balance sheet. First asset side, land 25,000 rupees. He has given one adjustment. A, land is valued at 38,000 rupees. This is new balance sheet. Only market values of assets and liabilities we should write. So now market value of land is 38,000 rupees. No? That amount in amount column we should write. How that amount comes? Land cost price in inner column 25,000 rupees plus appreciation. Market value is how much? 38,000 rupees. Cost price is 25,000 rupees. So appreciation is 13,000 rupees. That amount. In outer column, 38,000 rupees. Next, machinery 40,000 rupees. Adjustment is given. Depreciate machinery by 5,000. Machinery cost price is 40,000. And in adjustments is giving that 5,000 value is depreciated. 5,000 is decreased. So market price is 35,000 rupees. Market value only we should show here now. How that 35,000 comes? Machinery in inner column cost price 40,000 minus depreciation 5,000. In outer column market value 35,000 rupees. Next, furniture 25,000 rupees. There is no adjustment for furniture. So in new balance sheet, same value we should write. Furniture 25,000 rupees. Investments 18,000. No adjustment. So in new balance sheet also investment value same 18,000. Investments 18,000 rupees. Next, stock 52,000 rupees. Adjustment, depreciate stock by 2,000 rupees. Stock cost price is 52,000 and depreciation is 2,000. So market value is 50,000. Stock in inner column cost price 52,000 rupees minus depreciation 2,000 rupees. In outer column market value of stock 50,000 rupees. Next, debtors 35,000 rupees. No adjustment. So in new balance sheet also debtor value same. Debtors 35,000 rupees. Cash 15,000 rupees. To retiring partner, existing partners are not paying any amount. So no cash is going and no cash is coming. So in new balance sheet also cash 15,000 only we should show. Cash 15,000 rupees. Asset side completed. Come to liability side. General reserve 30,000. So this amount we transfer to all three partners capital accounts now. So now there is no general reserve amount. Don't show general reserve in new balance sheet. Next, creditors 25,000 rupees. No adjustment. So in new balance sheet also creditor value same. Liability side, creditors 25,000 rupees. Next, other liabilities 5,000, no adjustment. So in new balance sheet also, other liabilities value same, 5,000 rupees. Liability side, outstanding liabilities 5,000 rupees. Finally, come to capitals. Mahesh is retained now. So show the capital accounts of Harish and Satish. Which amounts you have to show here? In capital accounts, we got balance carried on figures now. 60,400 for Harish, 55,600 for Satish. These two amounts we have to show here. Harish capital 60,400, Satish capital 55,600. Come to retaining partner. Is a due amount we transfer to loan account now. That amount also we should show here. Mahesh loan account. Which amount we should show here? In Mahesh loan account, balance carried on amount is there no 70,000. This amount we have to show here. So Mahesh loan amount is 70,000 rupees. So everything we have taken in balance sheet. Finally, find out the totals of two columns. 2,16,000 rupees on two sides. Thus, two sides you should get the same totals. Then only our problem is correct. So this is all about 12th problem from retirement of a partner topic. Hope this video is helpful to you. Thank you.